from BH Digital, who also led our Series B. Peter's over here. He was whooping before.
Look.
Thank you very much for joining us. And are they here? Are they here?
Oh, wait.
No. We were going to have a beverage.
I know, it's going to be
It's
fun.
cocktail hour.
I know.
So.
Thank you, everybody, for staying.
Yes, absolutely.
Wow.
I loved the title of this presentation.
It caused a lot of stress, which we'll get into.
Okay, so this is the now fourth fireside chat that I've had with investors in the space, and what's been what I've really liked about this format, and I told you backstage, we can go a little bit deeper in the things that really smart people are getting excited about, and so far they've been really all over the map, which has been exciting. So we're going to talk a little bit about brands, games, and some of the things that you're doing, and the institutions are here, not the ones we expect. I think it's perfect framing. I'd love to hear, maybe as a starting point, just a little bit more about BH Digital, the thrust that you have, the focus, and really, kind of where you're spending most of your time as a firm, and then we can get into these couple of core theses that you're chasing down outside of Messari. So.
Perfect. Well, yes, Messari is the best, so we should just start with that. So at BH Digital, so I guess take a step back, Brevan Howard, one of the top global macro investors in the world, had been investing in the crypto space for the last 6 years and decided about a year ago that the industry had matured to the point where it made sense to offer a dedicated fund for crypto to Brevan's traditional investors. Really exciting opportunity. So we launched about January of this year. The fund has 3 strategies. There's liquid directional, so taking positions in the crypto secondary markets, liquid trading, and then the part that I'm part of, venture, which I co-run with Peter Johnson, who's over here, the best partner ever. Peter had previously been at Jump for 9 years, where he ran all of their fintech and crypto investing. He and I worked together a ton. I've known him for about 7 years. We co-invested in 11 companies. We co-founded the DeFi Alliance. And we're very investment thesis driven, looking at various sectors. I would say we spend the majority of our time on what I'll talk about here, gaming, fashion, metaverse, smart contract security, derivatives, just different pieces of infrastructure. We do take a pretty broad look at the space. Most of our investing is early stage, so about 75% of our historical investing is pre-seed, seed, and A, and that's where we really do like to focus, although for special companies, we like to do B rounds. So that's the general gist of it.
I think people have gotten enough of me and enough of Messari since they've been milling around the halls. So we won't talk about Messari and kind of the data play, and you have made a couple of really good investments there, including partner of ours, Coinmetrics. But let's talk about games.
Yes,
right?
Let's talk about games.
It's happy hour, so we're going to talk about games. I don't know if do you have the clicker?
Yeah.
Are we able to advance? So we can.
We'll start.
Talk through these, and then I'll kind of interject as we go along.
Excellent. Okay, so we love investing at the intersection of games and crypto. I personally love games. I'll just share why. My father was a college basketball coach, small school, and I learned at a very young age that games are more than just games. How he coached and how his players played is what literally put food on our table. So to me, a game was much more than a game. I also have 3 teenagers who I game with all the time. Pokemon Go, I'm a level 44. I've caught 44,000 Pokemon in the last 6 years. I play a ton of Rainbow, Fortnite, really love it. And through my kids, what I've come to realize is that there is no divide anymore for their generation, so Gen Z and younger, between real and digital. It's the same. So they live at home, they go to school, but their third place, games. There's just no difference. They have friends at school, they have friends in Fortnite, they're just friends. So that's sort of how I got involved with games and why I love games. So then we switch over to what is a game. And games have changed a lot over the last few years. So you can see from the definition, I think, over here, this is how I think about games. So the ultimate social networks, places to hang out with your friends and build communities, places for creative experiences, digital theme parks. We see tons, which we'll talk about, lots of brands building immersive, authentic experiences for their consumers, places of work, direct-to-avatar commerce, metaverse, NFTs, and even bank accounts. So I define game really broadly. So then we get into who games? What's the size of this market? It's big. So right now, we've got 3 billion gamers globally. Thank you.
We'll take
cheers
I'm parched,
to gaming.
so cheers
Yes.
to gaming.
All right.
It's a big numbers on this slide.
Well, they're going to get bigger. So we've got 3 billion gamers globally. So basically, every 1 in 3 people in the world is a gamer. In 2021, we had 180 billion in revenues. Out of that 180, 136 billion was solely attributable to virtual goods. So in-game items that currently gamers don't own. And if you drill down there, one of the biggest companies in the space, Epic Games, really popular game Fortnite, over the last 4 years, 20 billion in revenues, virtual items. And then when you think about who's gaming, which I think might be the next slide. Yeah. So it's not on this slide, but 81% of Gen Z games. And then you go to 75% of kids aged 9 through 12 in the United States, UK, Canada, Australia, and New Zealand play Roblox. Roblox has 50 million daily active users, 10 million people in the game at once. And so then I think to myself, okay, if we've got 81% of Gen Z gaming, to me, it makes sense, especially given the definition of game we just went over, that pretty much all of Gen Alpha is a gamer. So there are 385,000 babies born every day, which means we're adding 140 million people to the gaming TAM every year. It's really, really big. So then should I pause or keep going?
No, I'm just trying to take in the numbers. I mean, I'm gonna have a bunch of questions, but
okay, good.
And
yeah.
I think there's one more punchline slide.
Yeah, we're not
here,
quite done because I also include metaverse within games.
Yes.
And here's one area where the institutions are actually aligned. We've got Goldman and Morgan, gaming will be a $5 trillion opportunity. Citi says it'll be worth $13 trillion by 2030. McKinsey says $5 trillion by 2030. And my favorite, Tim Sweeney, says that he expects the metaverse over the coming decades to be a multi-trillion-dollar opportunity. So I'll pause there because yes.
Okay, so this is gaming and metaverse. I think people in general, this is a fun one to get behind, because you see the size of the gaming tailwinds. I guess the question is it going to, when are we really going to see crypto gaming take off in a meaningful way? And is there some inherent tension between crypto and the economics of crypto and the fun of games?
Yeah.
That's not to say that these gaming companies are the most altruistic enterprises in the world. They have their fiefdoms, their own kind of centralized, monopoly, digital good marketplaces. But that's been tough so far. And Axie was the success story here.
Yeah.
It's tanked, right? As some of these economics have kind of unwound, it's become a problem for some of the early crypto gaming winners. And it does seem like you're going to have to get the gaming element right first, and then maybe layer that in. So who are some of the early winners here that you think will actually cross the chasm and be some of the early success stories for gaming? Then we'll talk about the metaverse as either, I don't know if that's a subset or a superset, but let's start with the Fortnites of the world and Epic and so forth. Are they going to disrupt themselves? Are they going to include this, or is it someone new?
Yeah, those are great questions. So let's kind of unpack that. Let's I think the first piece is, I often get, well, gaming didn't work in Web3, or gamers hate NFTs, so it's not going to work. So when it comes, I think the 2 games that have gone viral in crypto thus far are Axie and StepN. And I think what we've seen there are gaming economies that work in certain instances and don't work in others. We've also learned lessons on what it means to actually work in a game. We've learned lessons about security and infrastructure. So a lot of lessons learned. In my mind, those companies are sort of on the outer bleeding edge, taking a lot of cuts for the benefit of all of us to really help accelerate development in the space. we are so early in gaming tokenomics, and we have so much work to do there. So I don't think, and to your point, games fundamentally have to be fun. In order to compete with Web 2 games, which is what Web 3 games have to do, they have to be fun because you can monetize fun. If it's not fun, you can't make money, is really what we believe. So that is really, really critical, that piece. OK, so from there, what I go to is, what does Web 3 do for games? Because that's a quite. Oh, let me address the NFT thing really quick too. So everybody here should just take a second and Google why do gamers hate free to play, and go back to the early 2000s and everything gamers are saying about NFTs right now, they were saying about free to play then. Free to play right now is 80% of gaming revenues. Mm-hmm. So, and that's where I think crypto is going to go too. So that's, yeah.
What was that evolution like, right? So was it a business model transformation? Did you have an incumbent that was an also-ran that kind of set the free-to-play model as a differentiator that ultimately started to penetrate? Was it a little bit more gradual? If we want to make that parallel, what are the case studies that you would look at an individual game production company basis?
Yeah, so the first observation would be don't start Web3 games in the United States. So, because free-to-play started in Asia. And I think that in Asia, there's just a willingness to embrace different, more dynamic models. And some of the, because a lot of gamers, when free-to-play came about, they found it very offensive. Like, no, I need to pay $60 for this game. Like, that's really important to me. And who's taking advantage of me? And then they would call it free to start is what they would call it instead of free to play, because the game would be free until you started needing to unlock levels, and then you had to start paying. But ultimately, it was a better model, and it helped democratize gaming because more people could play. People could try games. And if they really love the game, then they can start spending in the game. So I really fundamentally think we're going to see the same evolution. But we have to make sure, and this is really the key part, is what are we offering that's new? What's going to enhance the gamer experience? And I think here, if I should just go into it, like crypto to me does 5 things for games. The first is obvious, and it's the ones that we all talk about. And today, whoever controls the Web 2 gaming servers owns the virtual items. I mean, that's just the way it is. So with crypto, we changed that, obviously, to where if you've got in-game items that become NFTs, the gamers own those NFTs. You have secondary liquidity for those NFTs, which is really important. And then you're able to track the provenance, so the history of those gaming assets. People that own items tend to feel agency, they care about them, they become bigger fans. So I think ownership is really the first key one. The second one is accessibility. So anyone with an internet connection, anyone in the world can access public blockchains. So you can go to Flow, you can go to Polygon, you can go to Ethereum, and you can create virtual items. So anybody can do that. And now what you should say to me is, well, can't people do that today? And the answer is yes. Roblox paid out $500 million last year to creators. But it's really important to note that only 81 creators made more than $1 million, and only 7 made more than 10 million. And Apple and Google take 30% off the top. So by the time you're paying out creators, it's a really small cut. So I think we can do better. Because one thing that Tim Sweeney did for us with the Apple Epic lawsuit is now you can steer your gamers out of the mobile environment to browser. So where that's important for crypto is NFT purchases and sales can happen outside of the mobile environment where it's not really allowed anyway right now. And you don't have to give up that 30%. There's issues with in-game experience and all of that. But that's the second point. So you've got ownership, you have accessibility, and then you have programmability of gaming assets. So Peter and I talk about this quite a bit. If you ask me today, what's the killer app of crypto, I would say trading and stablecoins. But I don't think that's how it will be tomorrow. I think it will be programmable gaming assets. And where that's going to go, we haven't even touched on at all. But you start to see it with the ability to plug into DeFi. So part of the reason Axie went viral is that gamers created liquidity pools for SLP, and then they were able to convert out into ETH or USDC and then into fiat, which was a really big deal. And then you can rent, you can borrow, You can lend your NFTs. So I think that's really critical. So those are the first 3 things, and then you get into royalties, right? So this is a new revenue stream for developers that does not exist today. And so I tried to think about myself and Pokemon Go, and what could Niantic, the creator of Pokemon Go, make in revenues if it made all of the Pokemon NFTs. So this is probably bad math, but this is the way that I was thinking about it. It's instructive to look over at eBay, where physical Pokemon Go cards trade. So it's like a secondary market for the physical cards. There are at least 700,000 Pokemon physical cards listed on eBay, which is a little shocking, ranging from a few cents to $4 million. In fact, Pokemon physical card just traded for $5 million to Logan Paul. You know this guy? The influencer? Yeah, I guess it was a big deal. But in any case, eBay takes 10% on every one of those transactions. The first half of 2021, eBay made like $200 million just on trading card transactions. So I figured if Pokemon Go has 71 million players, which it does, and if you give each of those players 5,000 Pokemon, say you could trade them for 50 cents, you got like 355 billion Pokemon, and if Niantic takes 10%, it's about 17 billion in revenue. So that's a lot of new revenue. And keep in mind, there are dark Pokemon Go economies sitting next to Pokemon Go, where people are doing this anyway. So why not bring these economies lawfully into the game and let the developers share in some of that? OK, so that's 4. The last one is the one I thought was really interesting, what Brian Quintez said about what are you trying to protect people from. So this is the big one to me, and that is ownership of the game itself. And this is fraught with legal risk. I'll just say that up front. Asset classification, is a security, is a commodity, DAO structures, and also just early gaming tokenomics. But the whole point, at least why I'm here, is we're trying to democratize who can generate wealth. And let's take a Web 2 Fortnite versus a Web 3 Fortnite. Web 2 Fortnite, you have all these early gamers that made Fortnite really valuable. And Fortnite, at the end of the day, is a social game. So you need people to create network effects, and that's what gets it viral. And like we mentioned, 20 billion in revenue over the last 4 years. So those early gamers did a really good thing for Epic Games. So good that Epic Games' last valuation in the private rounds was 32 billion. So guess what, Ryan? When Epic Games go public, the first time retail gamers that made that game special can participate is at the price of at least 32 billion. Roblox is even worse because Roblox doesn't create any of the content there. It's all user-generated content. When Roblox went public, the first time retail gamers that helped make Roblox valuable could participate in any of that was at $41 billion. So we switch over to the promise of Fortnite 3. Web 3. So now you've got Web 3 people that are gaming in this Fortnite 3. And when Fortnite decides to issue a token, it can issue that token to the gamers that were there day one, proportionate to the level of play. And hopefully, those gamers are participating at a much lower value so that they can actually generate wealth for Epic Games, in this case, who they're creating all of the wealth for in the first place. That's the promise. So that would be my number 5. But there's a lot of issues with that.
Well, that was a TED Talk inside a fireside chat. So, it's a great articulation, I think, top to bottom of the gaming thesis. So I wanted to have you go the whole distance there. I don't want to talk about the metaverse today because it's just a word to me. I think that I think that will be something that's interesting in 10 years. Maybe you disagree. Maybe you think it's here sooner.
Ooh.
I think where the rubber meets the road is probably going to be in gaming. And it's something that doesn't require massive hardware investments. It doesn't require kind of stepwise improvements in the wearables that people are going to need to make that a reality. So it does seem like that's where the low-hanging fruit is because that's where the margin is, right? The 30% take rates, the 10% take rates, the 100% take rates. If you're talking about just who's able to issue some of these digital goods in games. So I do want to talk about brands, though, right?
Let's do it.
So we have one more slide here.
Oh, yeah. Okay, yeah.
We were going to talk about gaming and brands.
Yeah.
But I think that was a good articulation of the gaming ecosystem and kind of the opportunity set. The reason I like these two together is because the institutions, the big brands that are coming in, I think gaming is kind of like the intersection between like these brands and ultimately like where NFTs are going next and where kind of digital goods that are trading on crypto rails are going next. So what do we have here aside from a bunch of big logos? What's the punchline for you in terms of what we'll see over the course of the next few years? Is this kind of recession, or is this crypto recession resistant? Is this bear market resistant, some of the activities here? Or is this going to be a fad where they throw their hands up and say, you know what, NFTs were a thing last year, they were on SNL earlier this year, and you know, kind of we've jumped the shark, so we're going to move on to the next thing?
I don't think so. Okay, so let's see. So the title, the institutions are here, just not the ones we expected. I use that tongue-in-cheek because the institutions are here. I mean, I work at Brevan Howard. It's a big institution. And it's funny because there's, I think, videos of Peter and I, and I'm looking at him because he's right there. Like in 2014, like, oh, the institutions are coming, like this big wall of institutional capital. It's going to be here in like 5 months, and it just took a long time.
The mythical wall of money.
Yeah, the mythical wall of money that never showed up. Well, I mean, it's here. I need to be careful what I say. It is here. It's just, yeah. And some of that lays at the feet of the regulators in terms of there's a lot of clarity we need that will really open that up. A little bit of a different story for the brands, though. So, and the reason I use this title is because I don't think people really appreciate just how much is going on in this area. And I loved that you brought up games because that's where this started. You know, you take a brand like Gucci, and just Gucci has partnered with Roblox, The Sims, Pokemon Go, League of Legends. They really started with games first. In a way, I kind of view games as the training wheels that they're now taking off to enter Web3. And the numbers in Web3, I think, are interesting to look at. So you've got here what people in Web3, when these were published on Twitter, people were really fired up. Like, oh my gosh, Nike made $183 million in NFT revenues, and there were $1.3 billion in secondary sales. And I looked at that, and I was like, oh, that's really small. Like, Nike, they make $44 billion a year. Like, $185 million is nothing to them. Like, what are they doing here? So that was the question that I wanted to answer. Like, why are they here? And the reason I had the founding dates on the prior slide, let me see if I can get back to that, is because I think it's very interesting that these are not like little brands. Some of these brands have been alive for over 100 years. And so they have a lot to lose, but they realize they probably have more to gain. And so the way these brands are looking at this is sometimes you have to build community and culture and storytelling before you build revenues and product. They understand that in order to get to the next 100 years, you have to meet your consumers where they are. And like we talked about before, Gen Z and Gen Alpha are in games. They're also in Web3. And that's where the brands are going to meet them, which I think is a really important point here.
Your Louis Vuitton PFP will be much more important than your Louis Vuitton bag based on where
well, it's interesting, okay, because it's a couple things, right? Because, so I think what Louis Vuitton is thinking is, okay, Ryan, I'm going to sell your kid a $5 NFT for their avatar when they're 6. And all of a sudden, your kid's like, oh, I can flex Louis Vuitton. And you get to know the brand so that by the time they're our age, they're buying the $5,000 Louis Vuitton bag. And I think that's the strategy, right? Like, let's get to these kids where they are now while they're young. Let's build these cool, immersive experiences that are authentic to the environment that the brand is in, and let's bring them in. And I think similar to how we talked about games, you have to think about, well, but again, like Nike's not doing this for 180 million, Gucci's not doing it for 12 million. Like, what are they going to get out of this? So, and that's a piece of it. There's, and I think there's 4 components for the brands. One is just the NFT sales alone. So, and we've seen like Gucci as Gucci Vault, We've seen Balmain do some cool stuff with like fire dresses as NFTs. And that's what's cool too for the brands is it really opens up the design space. So you can design things for avatars that you can't do in the physical world. So like a fire dress, unless you're Katniss Everdeen, like that's not going to work on a human, but it works on an avatar. And the designers are super excited about that. So there is the pure NFT sales. And then you get into the direct-to-avatar commerce. So selling a bunch of $5 bags to, 160 million kids is not bad, right? So there's something there. I think where it gets really compelling, though, is with the phygitals or digital twins. We're not sure like what word is going to actually really take off here. But that's where you're selling. So let me just give an example. So let's say that it's Nike, and they're going to do a Balenciaga Air Force One. So they're going to announce that they're going to do this NFT drop with like custom shoes, and you're going to be able to buy the NFT, and then Nike is going to know how many it needs to manufacture based on what it sold. So that's nice for sustainability. And then the physical shoe is going to show up at your house with an NFC chip embedded in it. So then you're going to go to the Bulls game, right? And the Bulls are going to know through Nike some collaboration that they're doing. Because, by the way, Nike has a patent on something called crypto kicks. So through the chip, the Bulls will know you're there, and there'll be some special gated access that you get because of the chip in your shoe that's tied to your NFT, which then brings me to the last piece of revenue that I think is important for the brands. So not only do they have the primary NFT sales, they've got the secondary NFT sales, which were on this other slide, which they participate in at whatever royalty they set. And I think that the brands also potentially participate in the secondary revenue of physical goods. Because, and I don't know if this is going to happen, but the way I think about it is right now, Gucci could be participating in the sale of Gucci bags that are sold on The RealReal. They don't participate in any of that. If you have a chip in the bag that shows its authenticity and its provenance, that might be revenue where Gucci wants a physical marketplace now for secondhand goods. I don't know. It seems like they're leaving a lot of revenue on the table. And then there's just one other point I'll make on this, and then I'll stop. But I think I mentioned sustainability. And, some people like have a heart attack when you talk about ESG, and some people really, it's all over the map. So what I want to say here is Gen Z and Gen Alpha care a lot about sustainability, and so do brands. So the statistics are that 90% of Gen Zs and millennials care about their impact on the environment and trying to reduce that. 64% of Gen Zs are happy to pay more for an item if they think it is positive from a sustainability standpoint. So to bring this back to crypto, the fact that Ethereum has moved to proof of stake and now is using 99.98% less energy really, really matters. And I'll tell you why. The liquidity, the customers, and the infrastructure is in the Ethereum environment. So now brands don't need to go to these other chains that claim they're clean, but they don't have any customers, they don't have any liquidity, they have bad infrastructure, because that's a bad experience for the brands and their customers. So we want them in Ethereum. That's good for all of us. So that's it.
So the kids are going to come in because of the merge, and we finally have $5
Gucci bags.
We have $5 Gucci bags to get them addicted at the age of 6, which is good. We were missing our Coca-Cola with the Coke in the Coke moment, and now we can get the kids addicted early, and they will buy our bags as they get older, or the literal bags if you're Louis Vuitton.
That's the plan.
It's magical.
It's a plan.
I love it. All right. Tell your kids, your neighbors, well, maybe not your neighbors' kids, but your kids, your nieces and nephews, anyone that's a relative, to buy the new NFTs that are coming out. I do think, we're joking a little bit, but this is going to be fascinating to watch not only the incumbents and the institutions and brands that are trying to cross this chasm, and the gaming companies, but all of the infrastructure that's going to be built out around this, because I think this is going to be one of the areas where a number of kind of breakout applications are built that look nothing like what we've seen before, so we're not really imagining them yet. That gets thrown around a lot, I think, in crypto. It's like, we don't really know what the applications are going to be. This feels like a big enough culture shift and a big enough set of tailwinds that that we're going to see some breakout applications, and they're going to look entirely new, and they'll be more hopefully than just a fad. So, Colleen, thank you. This is a 201 level
it's a good
course,
way to end
and we
it,
get
right?
we got two birds, one stone.
Yeah.
With gaming and the big brand NFT thesis. So thank you for joining us.
Thank you
and
for
thank you for the
having me.
support. We're excited to work with you and the rest of the
We're
PH
thrilled,
Digital
Ryan.
team. So
This is great.
all right,
Thank
we
you.
kept everyone from the bar. Get out of here. I'll see you tomorrow.